I don't know what the market multiple is right now, but you pointed out that it certainly is pointing to what will be significant earnings growth for the first quarter of next year.
Yeah, it's about 22.3 for if you look at 2021 numbers, and that is on the very, very pricey side. Remember, we talked about what matters for the markets? Dividend growth, earnings growth, market multiple, liquidity. The market multiple is really rich right now, and the bulls say it should be rich because we're expecting a massive reopening and a massive increase in earnings in 2021. Okay, there's some reason to believe that may be the case, but we are historically rather stretched. I think the important thing to point out, David, is not just the S&P at a new high, but global markets are at new high. We've got a global rally that's been going on for several months now. So if you look here, Germany's at a new high today. Asia's been doing very well. Taiwan, Japan is at a multi-decade high, as Morgan has pointed out. Vietnam is at a new high because the dollar's been weaker. Some of these emerging markets have been strong. And even China is one of the best performing markets for the year. The China CSI 300, that's on the bottom there that you see. That's sort of the S&P 500 for China. That's essentially right near a new high as well. So broad market rally that we've been seeing here. The gainers this year, Morgan, I'd say there's three groups. The stay-at-home stuff that you see out there, there is what you see for not SPACs here. We should be putting up the gainers for 2020.
No, that's mine.
Etsy,
yeah.
PayPal's, ServiceNow, and Pool Company. Some of those other ones, the small stay-at-home companies, have really been doing very, very well. On top of that, of course, there you see some of the stay-at-home gainers that we've seen. The other group I would point out is semiconductors. I know we've seen a little weakness recently in some of the names like NVIDIA, but don't kid yourself. I mean, just look what's going on here with these companies. Semiconductors are in everything that we make, including cars and, of course, including anything from Internet at-home devices here. The biggest story of the three, the mega caps in 2020. Apple, as you see here, up 86% for the year. Microsoft, look at these gains here that we've seen. So you put together the top five, the mega caps, Apple, Microsoft, Amazon, Alphabet, Facebook. They're about $8 trillion in market cap right now. So the S&P is about $32 trillion market cap, 31. The top five stocks in the S&P are almost 25% of the market cap. And those top five, I would say Amazon and Microsoft and Apple, we talked about this morning in the morning call, is about half of the gains of the S&P. So that's why we pay so much attention. I get emails all the time, guys, about, gee, every day,
but Bob,
4 stocks you guys talk about.
Bob, you forgot about number 6. I mean, I just went in, of course, but it is by far the story of 2020 when it comes to a stock. And we know what we're talking about here. Tesla, which strangely is actually down today, but up, let's call it 690% for the year.
That's right. And if you'll notice, not to be a curmudgeon, what was the market high on Tesla? It was the close on December 18th. That's when it went into the S&P 500. There's a lot of research that indicates that mega cap companies that go into the S&P 500 run up going in and tend to underperform afterwards. This is a very well-studied phenomenon. So far, Tesla is living up to that. Now, that has nothing to do with the fundamentals. It's more of a liquidity play and a demand play. So it doesn't have anything to do with Tesla's fundamentals. But just look, the highest Tesla got was at the close on December 18th.
Shepard Smith here. Thanks for watching CNBC on YouTube.